Something big is happening in the energy world. An IPO, just launched. And it's not some flashy startup with a cool logo and zero profits. This is a company that's been quietly building the physical backbone of the clean energy transition for nearly 2 decades. And if you understand what's really happening behind the scenes of power demand right now, you'll see why this matters. Let me explain. This company has been operating since 2008. It actually started out as part of a major construction group before spinning off independently. Since then, it's been doing something most investors rarely pay attention to: building utility-scale solar plants and battery storage infrastructure, not just installing panels. We're talking full-scale energy systems, engineering, procurement, construction, testing, commissioning, and long-term operations and maintenance. Basically, they don't just build power plants. They keep them running for years after they're switched on. And if you've ever worked anywhere near infrastructure or energy operations, you know maintenance contracts are where the long, steady cash flow lives. Now here's where things start to get interesting. Over the years, this company has delivered more than 500 power plants. Combined capacity? Around 20 gigawatts. That's massive. And right now, they're actively managing maintenance for sites producing more than 18 gigawatts of live power. Think about what that means. They're not betting on the future of renewable energy. They're already embedded inside it. But the real story isn't what they've built. It's what's happening around them. Because demand for electricity isn't just growing anymore. It's exploding. And one of the biggest reasons is artificial intelligence and cloud computing. Every time a large AI model runs, every time data is processed, every time massive server clusters stay online 24/7, energy demand surges. Tech giants like Amazon, Microsoft, and Google are building enormous data centers across the country. And these facilities don't just need power. They need stable, reliable, uninterrupted power at industrial scale. That's where renewable energy paired with battery storage becomes critical. Solar alone isn't enough. But solar plus storage, that's controllable energy, dispatchable energy, grid stabilizing energy. And that's exactly what this company specializes in building. They sit right in the middle of one of the fastest growing infrastructure shifts of the decade. Not software, not apps, not platforms. Physical power generation tied directly into the grid. And right now they're ranked among the top solar contractors in the United States. But here's what really makes investors pay attention. Their pipeline is packed. As of late last year, they had an $8 billion backlog of contracted work, mostly engineering and construction agreements that are already locked in. That's not speculative future demand. That's committed projects scheduled to be built, which means revenue visibility stretching years ahead. And when you look at their financial trajectory, the growth is obvious. They expect to generate somewhere between $2.46 and $2.5 billion in revenue this year alone. That's a major jump compared to previous periods. Profitability is rising too, with projected net income between $140 and $155 million. But one of the smartest moves they're making isn't about growth. It's about structure. A large portion of the capital being raised through this IPO is going toward paying down existing term loans. That might sound boring, but in infrastructure businesses, balance sheet strength is everything. Lower debt means lower risk. Lower risk means cheaper financing. Cheaper financing means more projects. More projects mean more long-term revenue. It's a classic scaling loop. And cleaning up debt is how mature operators position themselves for expansion. And that's exactly why investors are paying attention. This isn't a speculative clean tech experiment. This is a proven operator with real assets, contracted revenue, and recurring maintenance income. Timing also matters. And right now, the environment is unusually supportive. Government incentives for domestic energy production are still active. Energy independence remains a strategic priority. Industrial policy is shifting toward infrastructure and resilience. At the same time, power demand isn't slowing down. It's accelerating. AI, electrification, manufacturing reshoring, grid modernization, all of it requires one thing: more energy, reliable energy, scalable energy, and companies that build the infrastructure to deliver it. That's why this IPO landed at a moment when investor appetite for industrial and energy names is heating back up. The broader IPO market itself has been regaining momentum, especially for businesses tied to domestic production and long-term infrastructure. And when you combine that with a multi-billion-dollar contracted backlog, rising revenue, expanding profitability, balance sheet improvement, and structural sector tailwinds, you get a setup that's fundamentally different from the typical new listing. This isn't about hype, it's about positioning. Positioning inside a sector where demand growth is almost guaranteed, because the modern economy literally cannot function without expanding power supply. So if you've been watching the IPO landscape in 2026, wondering where the real industrial opportunities might be, this is one of those moments worth paying attention to, because sometimes the most important companies aren't the ones making headlines. They're the ones quietly building the systems everything else depends on. And right now, one of those builders just stepped into the public market. The question is, will investors recognize what's really happening here before the rest of the market fully catches on? Get the name of this IPO and all the details for free at IPOstream.com.